Hey everybody, how are we doing out there? Doc Severson here, ReadySetCrypto, talking to you with the One Bitcoin Club webinar series. So I do these about once a week. Supposed to do one yesterday when I got a knock at the door from the power company. Said, hey, do y'all mind if we cut your power? And could not have happened during a worse day. But here I am. We're back. Love to know where you guys are coming in from today. Got a bunch of people online today. That's great to see you guys on a Thursday. Kind of a slow week so far, but we have BTC bottoming, which is nice. What part of the UK are you from? Love to know. I was just there last year. Well, God, it feels like last year. No, actually, a year and a half ago. Alberta, Dallas, Texas. See where else we got here. People from all over the place, all walks of life. Welcome aboard if you're just joining us here. Down south on a little island. Outstanding. That wouldn't be Isle of Wight, would it? Or is it Portsea Island? We got Turkey. Dialing in from Turkey. Good to see you guys. All right. Which one? Was it Portsea or Isle of Wight? Isle of Wight, yeah. Yeah, my mom grew up in Portsmouth. So we would look across the Solent at Ryde, and amazing low tide out there on Ryde. Incredible. All right, let's get started today. We've got some fun stuff to go over. I'm going to park myself down in the lower left-hand corner. I'm going to hide myself down here, get out of the way, and let's get going. So we typically, these things don't last very long. We usually go through these about maybe 30 minutes or so, and off we go. Okay, we're not going to be doing any trades today, so don't worry about that. So the One Bitcoin Club webinar series, I want to go through this just really quick. I arrange these in kind of a pyramid format. We start out with the basics down at the bottom, such as Introduction to Technical Analysis. A lot of you picked up that class for free last week. Short-term trading strategies was out there. It's another class that we have. And then, of course, they have the capstone fractal energy trading class, which is the same as my book, trend trading. And then we get on to the big applications like options for income as well as crypto futures. That's how to really make some coin in this. Trying to get to the 10 BTC club. Outstanding. All right. So there's lots of techniques that we can share with you guys in terms of how to accumulate, store, and most importantly, keep what you got. You got to keep what you got. So over the last couple of weeks, this is the third week that we've done this. We've talked about ways to increase your BTC stake through using options and or using price-only tools to find likely landing spots for the pullback. So if you were here last week, we talked about, we didn't have this out there. We just had this thing ripping to the upside, didn't know where it was going to stop. And I said, look, if you're on the sideline waiting for something, waiting for some kind of a pullback, you might as well just use something like Fibs, where you can just sit out there with a good till cancel order. It's going to feel a little scary when it happens, but you can sit out there with a good till cancel order and maybe you get filled. Maybe not. You just never know. The point is that a lot of these moves can happen overnight, can happen when you're not around, and the train has left the station without a limit order, right? So use the limit orders as you can for something like that. So we talked about that in last week's. So you can always find this on the our YouTube channel. You can find the One Bitcoin Club videos on the YouTube channel and check it out. Okay, so those landing spots actually paid off over the last few days. And also, a couple of weeks ago, we talked about using options with Bitcoin. So we can use them through Deribit or LedgerX, depending on what it is that you want to do or how you can trade, depending on where you live in the world, those kind of things. It's still kind of crazy. But a couple of days ago, I was able to get through the egregious process of funding an account on LedgerX and got myself on the pullback a $25,000 short put for 26th of February. So this is about 6 weeks away. And here's the deal. If the price goes higher from that, I keep the credit that I received. And on the 26th of February, my obligation goes away. If the price goes sideways through the end of February, I keep that credit that I received from selling the put. My obligation goes away by the 26th of February. Even if the price comes all the way down here to like 28,000 by the 26th of February, my obligation goes away. It's only if the price comes all the way down below support and undercuts the $25,000 level, I'm going to be on the hook for buying as many contracts as I sold of BTC, which is kind of the point, right? That's kind of the point. This is what we're trying to do. We're trying to accumulate, and being paid to buy BTC on a pullback sounds like a pretty ideal way to go. All right. Coob is from state of California, California with a K. There we go. Okay, so that's really what we talked about the last couple of weeks. Cincinnati checking in. Hey there, Vaughn. Good to see you. All right, this is a primary uptrend that we're in. What's a primary uptrend? Primary uptrend, you can tell this by a couple of different ways. So first of all, what you find is that markets in a primary uptrend generally do what they're supposed to do. And what I call linear. This is my engineering background coming through. Linear markets kind of go through the same kind of thing. Rise up, consolidate, rise up, consolidate, rise up, consolidate. Over and over and over again. So they do kind of what they're supposed to do. So everybody's kind of a genius in a bull market. It's when they move into corrective that all of a sudden everybody loses their mind because it doesn't make sense anymore. So right now, this is a primary uptrend. Things are making sense. When it pulls back, when everybody gets scared, can you believe all the bullshit that was out there with some of the articles? This is why you can't read articles. You can't read the news because you're going to go, oh my God. You know, there was an article that came out like 2 days ago that said, and it was quoting some dude, and he said, you could lose all of your capital. And, you know, people, if you've not invested for very long, if you've never been through something like this, all of a sudden you got people with weak hands that bought in at the high at 40,000. All of a sudden the price is down at 28,000 or something, and they're just losing their minds and they're selling out. And it happens every time, right? So you've got to be one of those strong hands that waits, that does the opposite. When the price is coming down, when people are scared, you're buying at that point. And it takes a while. It's not something you can just like click your fingers and turn on like a switch. I can sit here and tell you till I'm blue in the face, you know, buy when other people are scared and sell when other people are, you know, are complacent, those kind of things, the old Warren Buffett stuff. But unless you go through these things a couple of times, it's just not going to click in. So again, primary uptrend, we need to find ways to get pullbacks. So during a primary uptrend, you're going to find the price going up, pulling back to a logical place of support is typically the way that we describe this, or landing zones. These help, but it's not precise enough if you want to limit risk. So these landing zones we had the other day, it's like, okay, it's sort of like you throw it out there. It's kind of like standing on the freight train, standing on the train tracks and, you know, holding up your hand to the freight train saying, stop, you must stop here. This is a fib retracement. So it feels a little scary because the price generally will just run right through those things. It will not stop to the tick and bounce where you want it to go. So you have to put up with a little bit of pain on something like that. So what we're talking about here is precision. If you can find a way to precisely find the short-term bottom. So that's the challenge that we're going to find today, is find a little bit more precision using charts to identify these precision entries. Okay, so that's today's topic, using price only for entries in an uptrend. Now, before you go any further, I want to remind you guys of the 4 rules. These are the 4 major rules. This is 1. Larger time frames dominate the trend. As an example of that, if you're going to walk your dog from point A to point B, point A to point B. If you're going to walk your dog, let's say you're a 200-pound guy and your dog is 15 pounds. You've got several times the mass of the dog. Hopefully that dog is not going to pull you over. You're going to go from point A to point B. You're thinking about other stuff. You got your headphones on. You're jamming to something. You're going to go in a straight line. You're going to go in the shortest possible distance from point A to point B. You're task oriented. Meanwhile, the dog has got a different deal. The dog will start and will basically orbit by the length of the leash. And he's going to go in a very circuitous route all over the place, marking his territory everywhere along here. But guess what? They show up at the same point B as you do. This is a good example of what a shorter time frame looks like. You can see the green line here is the larger time frame. This is the larger time frame. It's got several times the mass. It dominates the trend. You will determine the direction that the dog ultimately goes in, or at least that's what happens when I take the dog for a walk. It depends. If it's my son's dog, she will determine the direction that I go in because she's probably about twice as strong as I am. She's a piece of work. Okay, so that's rule number one. Larger time frames dominate the trend. Rule number two, though, is reversals start from the inside out and propagate up in time frame. Now, the analogy I use for something like this is coincidentally like a virus, right? A virus will hit you with one virus, and then it attacks a donor, and it starts to multiply, and then next thing you know, you feel like crap, right? You're down. So it became from the inside out, right? It started with one little virus and it multiplied and it propagated higher in time frame until a significant portion of your cells were infected. And that's when you don't feel so good. So reversals happen at smaller time frames. So something like the 1 minute chart or 5 minute chart, all of a sudden you'll see a reversal. And if there's anything behind it, next thing you know, it propagates to the 5 minute chart, then the hourly chart. Next thing you know, the daily chart's reversing. What we just saw in Bitcoin is not a daily chart reversal. That is not a daily reversal. It's just a pullback. Number three, descending patterns break to the upside and vice versa. So if we got something like this, a descending pattern like this must eventually break to the upside. And normally we can delineate these through trend lines. Same thing happens here. An ascending pattern will eventually, sometimes it'll blow to the upside, will eventually break to the downside. So we can use some of these rules, just a simple rule. It's not a signaling rule, but it's just a law of physics that happens. And then what we also see, rule number 4 that's out there, here's rule number 4, is that range expansion will lead to range contraction. And then that range contraction will eventually lead to range expansion again. And then range contraction. So markets forever go through this cycle. Range expansion, range contraction, back and forth, back and forth, back and forth. So now if I know these 4 rules, I can do everything I need to know on the charts with these 4 rules. I don't need anything else. Satoshi clip, cool. All right. So let's go to the charts and see what the challenge is and what we can do to improve our accuracy. So I'm going to go in through Technical Analysis 101. We just got a TradingView chart that's out there. There's that beautiful BTC chart. Wonderful. Looks great. Okay, and what do you need to do if you're trying to find dips in a market, if you're trying to find pullbacks in a market? What's a typical tool that most of you are going to look to use? What is a typical tool that most of you are going to look to apply to your charts to give you a read on what the market's doing and when to get in? Anybody out there? What kind of tool are you going to apply to the chart to understand what kind of a pullback you're going to, or how to enter on a pullback? Anybody? Okay, fibs, moving averages, RSI Bollinger Bands, moving averages, moving averages, moving averages, moving averages, moving averages. All right, what does a moving average tell you? What does a moving average tell you? Moving average tells you what the trend is. Moving average tells you what the trend is. MACD tells you what the momentum is. What is the MACD made out of? It's a moving average convergence divergence. It's two moving averages which have got a histogram thing going. It's the difference between the two moving averages, right? So moving averages is just telling you trend. Moving averages is just telling you trend. I want to be a little bit Socratic about this. I don't want to just, I want you guys to work for this a little bit because you'll learn a lot more from it if you work at it. Because a lot of you guys are learning technical analysis on Twitter. You're learning it on YouTube. You're learning it the wrong way. Beef, stew, yes, ham, spam. There we go. Okay, so moving averages is just a trailing moving average of where the price has been. Moving average is just a trailing average of where the price has been. So if we do like a moving average here, and sometimes what people will do is they'll use two different time frames of moving averages. Like they'll use something which is a little bit more responsive, and they'll use a moving average crossover. What's the biggest problem with a moving average crossover strategy? Does anybody know what the biggest problem with a moving average crossover strategy is? Anyone? There's no wrong answers. Okay, it's lagging. It's lagging. Time delay. Those are all correct, but there's one more thing that I'm looking for. What's the biggest problem with a moving average crossover strategy? Biggest problem. Okay, I'll show you. Moving average crossover strategies is, and I think Arayo has got the answer here, but let's put it this way. When you have the price that's going sideways, you will get, when the price is doing something like this, you're going to have moving averages that just sit there and tangle around each other, and are going to give false signals up and down, false signals up and down. It's going to be an absolute mess. You want to give up trading if you're using a moving average crossover strategy in the sideways consolidation. What usually happens is you'll take the first couple of these and lose, you'll lose, and then finally you give up. And just when you give up, the thing blasts off and leaves you on the sideline. Oh, Oreo. Okay. Too many people looking to trade a crossover. So crossover strategies, not only are they trailing, but they absolutely suck in a sideways pattern, right? You don't know when a sideways pattern is going to show up. You can estimate that with fractals. You certainly can. Okay, so moving average strategies are, sometimes people add ribbons. God, they look beautiful, don't they? I guess what I'm looking for is normally in... we can turn this into a TA 101 class here, but normally if you're looking for some type of a pullback, the tool that's most usually associated with that is an oscillator. Okay, so let's do this. Let's have a little fun. Let's go into TradingView. Let's add some oscillators. Oscillators, there's tons of oscillators here. There's the awesome oscillator. My God, this has got to be the greatest thing ever, right? Let's add the awesome oscillator to this. And in particular, what I want you guys to look at is this pullback that's just happened over the last couple of days. What's happening with the awesome oscillator? All right, it's going up, and basically it's still telling you not to go into this trade. You're still sitting on the sideline. You've not gotten a signal to go back in. That doesn't sound very awesome to me. This is actually the guy that wrote this. Bill Williams is actually a genius. He is. I've got one of his books. It's one of the better ones that's out there. He wrote it a long time ago, but it's really a very good book. So that's the awesome oscillator. Okay, what's the problem with it? It's trailing. It's trailing. It's too slow. So let's try something else. Anybody have anything else though? Let's try, Let's try the next one here. Well, everybody knows about the stochastic, right? So let's throw a stochastic on here. Just the basic stochastic. Okay. We are just now getting a crossover. Can you guys see this? We're just now getting a crossover, and some people might find that this crossover is not coming from deep enough. So there'd be some confusion, but notice what's happened here. The price has gone from 32,000 all the way up to 40,000. There's 8,000 points of movement in here. 8,000 between there. And it just crossed over. Just crossed over. Okay. It's slow. This is a trailing study. This is a trailing study. It works best when markets are sort of choppy. But when it's going through a severe pullback like that, it just can't keep up fast enough. Can't keep up fast enough. All right, so we're going to fire the stochastic. Let's try another one here. There's something that's in my introduction to technical analysis, or no, it actually may be short-term trading strategies. There's a study called a Fisher transform. And what I like about Fisher transforms is they're a little quicker. They are a little quicker. So for instance, it caught this one on this pullback, but it has not yet crossed. It's still pointing down. It's showing the divergence here. It's showing the divergence, but it's still pointing down. It has not yet fired long. Let's see, what did I call the price change in dollars, the price change in points? Because that's what I'm used to saying. I'm used to saying something is 8,000 points. I'm used to talking about something like the S&P. But you're correct, that's $8,000. Let's keep the long-term stuff let's keep the long-term stuff for any questions that are not on point. I can answer those at the end of today's session. Okay, let's go through another one. Let's go through a couple more. Hopefully you guys are getting my point that just because something's a cool looking indicator doesn't mean squat. They all have their problems to this. Let's see, let's try, a lot of people have said, oh my God, the RSI. Oh, you hear this singing, right? You hear the RSI, Relative Strength Index. Oh, because everybody has such a strong opinion of the Relative Strength Index. The RSI by Welles Wilder, excuse me. Okay, so we're seeing the same kind of thing. We're seeing a little divergence up here. We've had the RSI turn around, but from a level of 60, it's certainly not from an oversold level. So this one is kind of dubious as to whether or not this is a true signal or not. Okay, a lot of people want to see sell-offs go down to 30 or so. This thing has come from so high that we had an RSI up to 90 before this thing finally came down, right? But there's your signal. Is that good enough? Is that deep enough? A lot of people will be on the sideline. A lot of people on the sideline with this, even with the Relative Strength Index, the RSI. Okay, and I'll say this, even my wonderful, study that we use here at ReadySetTrade and ReadySetCrypto, which is the RSI in Laguerre time. So this is not a linear time series. This is an adaptive time series, is still behind the curve. So my point here, guys, the problem, the challenge is that if you're using any type of a study to make a decision, it's going to be trailing. It's not going to be as quick as evaluating something in price. Oh, but price is so hard. It's so much easier with the studies on here. No, it's not that hard at all. Okay, what you have to do is you have to go down in time frame. Remember those rules that we talked about? What's rule number 2? Reversals start from the inside out. So if you do all of your work just on one time frame, yeah, it's going to be a problem. You're never going to know when these things reverse. So let's go down in time frame a little bit. Let's go down to something like the 5-hour chart. Okay, what's happening here at the 5-hour chart? We can see that we had a former uptrend, moving into a downtrend with lower high. And all of a sudden, what's this? This is a higher low. So all of a sudden we have a higher low, and then we break above here to a higher high. Sorry, I'm trying to do this with a mouse. It's not so easy. So our entry is about 36,500 on the breakout of this, what I call a trap entry. This is a trap entry on a smaller time frame, because what's happening is you're trapping all these shorts that went short here. Here, let's look at this. If you're just looking at this right there, what do you see right there? This is the hard right edge of price action. This is where everybody lives, on the hard right edge. You're seeing a lower highs and lower lows. We're starting to drop into a downtrend. There's the first lower high, lower low, lower high, and everybody's just assuming this thing is going to be heading down. This is the trap. The trap is sprung at this point now. This is a bear trap, trapping the bears. It's a lower high, and all of a sudden, as you get breaking above 36,500, there's your entry right there. Okay, you can even go down in time frame to the hourly chart. So here's the hourly chart. So there's your downtrend. There's your downtrend. Lower highs, lower lows, all through here, right? Still a downtrend. And remember, what did we talk about? Rule number 3, descending patterns will break to the upside. So there's your first warning right there at about 34,400. And there is your reversal, because all of a sudden now from a lower high, lower low, you make a higher low, higher high. There's your first entry right around 35,000, which is significantly faster than everything else that we've looked at with using studies. So it's just being able to use multiple time frames, Black Labs, right? That's the Bork. That's the infamous Bork. So there's your reversal right there, guys. So 35,500 or so is your entry on something like that. So does it require you to understand a little bit about price action and about trends and multiple time frames? Yes, it does. It requires you to know a little bit more. But you have more edge than other people do, because everybody else is getting in at 40,000. You got in at 35,000. This is how you become part of the 1BTC club. You get more edge on things like that. Okay, does that make sense? This is how you can use very simple techniques. In fact, what most people say is, oh, that guy doesn't know what he's talking about. His systems are so crude. But price has no delay. Price is the ultimate arbiter of what value there is in the coin right now. It's not what somebody says. It's not what somebody thinks. It's not what some study that's 14 bars trailing is thinking about. Yeah, the study that's 14 bars trailing is going to give you more confirmation, but the move might be over by the time you're in it. Okay, so that's how to evaluate based on price action. Let's go back to our chart here. Let's summarize a little bit, and I'll send you guys on your way. So oscillators are used to find pullback entries in a larger uptrend. That's their job. MACDs is momentum. MACDs are much better for determining things like divergences and being aware of when things are about ready to fail. Especially, my favorite way to use divergences for MACDs is where you start to see things like this. When the price is doing this, what you should be watching for in a MACD is MACD doing something like this. Like that. That's a positive divergence on the MACD. Look for that. That's what you need to do with MACDs. MACD is the signal. That's the sort of the signal between the signals. It's reading between the lines and seeing the kind of the second derivative of things. Okay, so oscillators are just used to find pullback entries in a larger time. The problem is the signal will always be trailing and the actual rally from the pullback. You're going to be late. Some will accept that in order to get some more confirmed break. But usually in my mind, confirmed means that everybody else sees it at the same time. That's a lot of edge you're giving up. If you want to be a pro, you're going to take the first entry when things feel bad. So reading price is always the most accurate way to get the pullback entry. It just takes a little bit more work than watching for an oscillator cross, because you have to actually understand what's happening with the price. But I love that. I have to have that. I have to be able to look at the different time frames to understand what's happening. So I'm never asking somebody else on Twitter saying, what do you think about the price here? I know what the price is telling me right now, and I know what would have to happen for the price to reverse. It's not about predicting the future. It's knowing where things will shift. I know what the price would have to do in order to shift trend. And I can't tell you how much difference it makes in terms of looking at things. So if you're into trading markets, join us and I'll take questions here in a minute. I just want to offer a little bit to you guys. If you trade the equity and the options markets, I'm on every morning at Ready Set Trade. I do a live show. You can join us for free at elite.readyset.trade. Join the 10X tribe. There's a whole pile of people in there that are just like you are. They're trying to make money and trade the equity markets. So if you're new into the equity markets, you got your Robinhood account, join us there at Ready Set Trade. And also something that's brand new that's in this channel, the ReadySetCrypto channel, is we have also ReadySet Vision, which is on-chain analysis by the ever-brilliant Checkmate. And this is for crypto only. So go to readyset.vision if you want to know more about that. We also have some people in the Discord room at ReadySetCrypto that can help you with this as well too. And if you have if you like the price action, if you like the 4 rules, if you like to know what's happening with technical analysis and don't want to be using these old, silly oscillators that are delayed, then get up to speed on the 4 rules. I've got a sale going for the Fractal Energy Masterclass, which is what my book is based on. Right? This is 15 modules of information. Each one of them has got an ebook, an HD video, and an online quiz to test your understanding. So it is truly a masterclass. And normally if you go out to the website, it's going to be $149. But if you go to this site, right here, ReadySetCrypto.com/fractal. If you go to ReadySetCrypto.com/fractal, you can get that for $99. That's through this weekend. Don't lose out on this. Okay. Thank you very much for your attention. Appreciate it. We're just about on time here. So if you guys have any questions, I'll be hanging around for a minute or two and I can answer that. Now let's see. Hey, Marcos, 2 questions. 1, do we have momentum to break 42,000? And 2, can we have the best landing spots? Well, we just hit the landing spots. We just hit those landing spots, I think. So let's see. Let's go out to the daily chart here. So we talked about the landing spots last week. We're in here. And look, guys, I don't think this is quite done yet. Personally, I don't think we're going to break above 42,000. I could be totally wrong. But it's my sense that we're going to move to a sideways and volatile character. The market could benefit from this. BTC could benefit from going in a sideways and volatile for maybe, a few weeks or so. At the point where people, the furor dies down. It's kind of like if you're climbing Mount Everest to get up to a base camp, you acclimate to that altitude, and this is what BTC needs to do. It needs to acclimate above 30,000 right now. So this is the first move to that. We may get many swings inside of here. So when everybody gets their oscillator signal to finally cross, this is probably when it's going to dive back down again and establish more of, typically we see type of like a triangle consolidation in this area. Okay. Yeah, your brain on block. That's not me. I don't do the brain on blockchain thing. That is Mav. He's a great big guy. Big guy, big voice, right? Okay, what do I think of Elrond? I don't know. You're asking me like personally, or the way that I answer anything. Well, first of all, I have to be able to find it. Oh, there's Elrond. Okay, so let's look at Elrond versus Tether, and that's a nice looking chart. I do like that chart. This is what I'm talking about, quiet and trending. So this has come nicely from, and it's pulling back nicely, and it's expanding. So what you're seeing is the volatility is expanding on this. This is a broadening pattern like that. So this could use a little bit of consolidation. What I'll do here is I'll throw on the RSI Laguerre and see what we can get. So yeah, it does follow the pattern here. This is nice breakout from this high energy node. This one probably needs a couple weeks more before it's going to be ready to go. And if we look out at the weekly chart hardly have any data to read. This is a very new coin, so not much to be able to say on this one. But yeah, I like the trend on this guy. But apart from that, that's what I think about that. I don't think about any particular asset. A lot of people like to get into the religion of different coins and, like Ripple forever, man, and I don't care. It's just a price chart to me. Like what you find is when you go out to the equity markets, you don't get people that band together and say, we are the Amazon traders, right? Like the chain link Marines and people like that. You just don't get that in the larger markets. That's unique to crypto itself. Like, hey, how do you feel about this coin? I don't feel about anything. I just see a price chart. Like I buy stuff that's heading higher. That's really my rule. If something is heading lower, I avoid it. If something's heading higher, I'll look to accumulate it. Okay, so there's a question here. Like Peace Quest, what is my long-term prediction? I don't have a long-term prediction. What good is a long-term prediction really going to do to you? I think it's more interesting for a lot of retail traders to talk and speculate. Well, is Bitcoin going to go to 100,000 or 300,000 or 1 million or 10 million or limited supply and things like that? I don't know. And really, if you go back and look at time on people's thought and speculation about things in the past, generally what you find is everybody gets it wrong because there's exogenous factors that factor in and change the reality of things and that you don't know about right now. So there's this weird perception that people that do technical analysis predict the future. I do not. I do not predict the future. All I know is it's more about coming up with price levels at which I would be. So let me give you an example of that. If something's doing this, if a price chart's doing this, I don't know what's going to happen tomorrow. All I know is that if the price undercuts this level here, that's a bad thing, is it not? If the price comes down and undercuts that, that's the very beginning of more than likely it transitioning into something which is going to be a downtrend. Because people will follow these pivot levels here. And so if it undercuts a pivot level, I know about that, and I'm going to take action. I'm going to look to sell into the next rally. I will sell into strength at that point, and I will rid myself of that asset before everybody else does. So this is what predicting the future looks like. And it also, by the way, is rule number 3. Typically, when something breaks that descending trend line, it's about to get into a world of hurt. Yeah, your religion is to hodl. There you go. Let's see. Shopping Avenue. How to use a stop loss in a ranging market if you have time. Stop loss in a ranging market. First of all, if you have ranging market like this, it depends. It depends if you're trading. If you're trading the swings up and down, just know that what you're going to find is the market has a pretty good idea of where these levels are. And what you find is that people will sit there with their stop loss right above there. right? Maybe if they're short, they're going to sit there with their stop loss down here as well as their long stop loss down here. And it's pretty damn obvious where you're putting them. And what you'll find is that the market will move like bink, like that, just enough to get it to move in the opposite direction. So one of the things that generally retail traders do is that they set their stops way too tight. Way too tight. You're inviting yourself to get run over and reversed right there. You could get everything right on the trade, but if you set your stop too close, because you're trading with scared money. So what you got to do is adjust your position size down to the point where you just don't care about the outcome of the position. And when you do that, you can set your stops correctly. What do I think about Digibyte? What do I think about the XRP SEC case? Again, if I can't determine something through looking at the price, I'm not going to go out to CoinMarketCap or Crypto Telegraph or Cointelegraph or any of those, spam sites and come up with an answer the same as everybody else does. I'm not going to get into a subreddit and argue with people about religion and politics over something like that. I just look at the price. I avoid all the other crap that's out there. Honestly, I don't know the answer to that. I know that Digibyte is a coin. I know it's got a price chart. If you ask me, what would Digibyte have to do to reverse trend? I could tell you that, but I can't tell you anything about the politics of the case. Okay, let's see. Alda Castle, how much attention should we give to candle formation along with price movements? That's really interesting. So candle formation is important. It may not be as important as we all want it to be. Let's see here. Trying to think if there's any good examples of this. So let's just go to a straight price chart here and go to a daily chart. So we can see if you see things like this. Now, what I'll look for, I will look for classic reversal candlesticks. So here's a classic reversal candlestick right there, which is almost like a shooting star. But there is no such thing as a one candle reversal signal. It's always got to be confirmed. So this is a Steve Nissen kind of thing. You can read about his stuff. But if you look at some of these, like none of these really did show. Now this is a little bit of a reversal. This is a minor reversal where you had a higher high and a lower close. That's a minor reversal candle. So that should put you on. Understand what minor reversal candles are, because that'll put you on edge. That'll put you on at least warning to say, oh, that's a minor reversal. You can also have key reversal bars where you have a key reversal bar will look something like, it may, like if this is yesterday's candlestick, a key reversal bar will look something like this. It'll drive much higher than the yesterday's close, and it'll actually close well below this, right? So it's a higher high, but a much lower close outside of the entire candlestick, which is also a bit of a bullish engulfing or bearish engulfing pattern as well too. So those, yeah, you watch for those. Those, you do watch for those. By itself, it doesn't mean anything because you can see the price take off the next day many times. But it's a warning signal, if you will. Okay, bam, bam, bam. Feeling 50K by the end of January. Would you agree? Whatever you want to feel, man. I like where the trend is. This is, guys, if you want to see something, this is my North Star. If you're not part of the Omnia crew, my North Star is a log chart. Log charts normalize the vertical price movement. So look at this. This goes all the way from $4 a coin. This first, and this goes all the way back to 2012. This rally went up to 1,100, and we had about a 3-year bear market in here. About a 2-year bear market. It went from the end of 13 to, it started to break at the end of 15. So 2-year bear market, And then most of you guys remember this wonderful 2017. But what do we have here? Range expansion goes to range contraction, nice triangle consolidation, and then break above this. So once I saw us breaking above about 14,000, I was like, okay, there's something here. This is it. This is what we've been waiting for. So it wasn't just the break above 20. And so if we map this whole thing out, I think it maps out to, on the log chart, something like 300,000. So if you guys are looking for a prediction, that's what the chart says. That's not what I feel, though. Okay, everybody, thanks again. I just want to, before I go, I'm just going to bring up these in case anybody was looking for these again. The elite.readyset.trade, that's the free equity tribe you can join. Just join for free and just learn something out there. If you're getting into SPACs or anything like that, ReadySet.vision, this is for on-chain analysis for crypto. And here's the sale on the fractal course so you can read charts like a pro. And that's ReadySetCrypto.com/fractal. This is on sale through this weekend for 99 bucks. Thank you, everybody. I will see you next weekend. You guys take care and please be good.